And welcome everyone to the December this Fintech Book Club discussion of Branch Tomorrow by Brett King and many contributors, including our own Efi Pylarinou. Uh, and so we're going to just jump right into our discussion, but I want to alert you first to the next discussion, which will be March 13th, 2026, and we'll be discussing um, Wealth Management with a Difference, Your Guide to Achieving Client Generational and Business Success by April Rudin and Nick Rice. So I hope you will join us for that. Um, and so we'd like to also encourage you to submit your questions um, in LinkedIn, and we will answer them and engage and discuss
All your
in
comments,
during
right?
any of your comments. So, put those in, and we'll catch those during our discussion because this can be interactive as well. So let's get started. There is a lot of data in each chapter of this book, that's for sure. Um, what can we take away, though, from the data-driven tour around the developed and developing world about cash, cards, ATMs, branches, digital banking, and payments? Yeah, it's a lot, right? Because I think if you go country by country, oh, that makes sense. But what does it all mean at a higher level?
Wow, I'm ready to jump right in on this one because the kind of global scope of this book, and I was especially appreciative, Effie, of your contribution to this book. But oftentimes when I hear Brett talking about these various points, I often have to remind people, look, China has 6 banks. The UK has 6 major banks. Australia has 4. Canada has, 3? I mean, we have over 4,000 institutions in this country, banks. We have another 4,000 plus credit unions. And collectively, we have like over 90,000 branches in the United States. So obviously, when we look at the big takeaways, what can we learn from a global perspective on this? I think one of the things that I am excited about this book is that it actually underscores just the huge shift in consumer behavior relative to digital use of mobile, laptop, desktop, etc., as opposed to transacting banking activity in a physical brick and mortar location. And I mean, let's face it, Brett's been talking about this for 15 years. I mean, I think his last book, or one of the first books where it was titled, what was it, Branch Today, Gone Tomorrow? That was like in 2012. So we've been kind of looking at this trajectory for a long time, but we see how hard it is to actually get people to let go of the emotional connection to bricks and mortar.
Yeah, I find that extremely interesting, at a high level. Who's leading? It jumps out to me, the UK has led in a way, the decline much longer, and deeper. The other thing that is very striking is it seems that 2015 overall, more or less, is the peak branch point. That's, it's a decade ago, and we have questions about what will happen going forward. It's clear that we can't argue a lot about the statement that branches are supporting the digital growth of the banks, right? It's clear that they are intertwined, interconnected, and not sort of a separate part. I mean, as myself and Paolo note in our chapter, branches have been treated as second-class citizens. They're like the expensive, whatever children that you have to support type of thing, and you're looking to find a way to, you know, get rid of that responsibility, and that's the reality. Having said that, I think that there's a lot that we can discuss around um, brand reputation, redesigning branches, deeply rethinking what customer centricity means, rethinking what relationship building means in this digital era, whatever it is, mainly mobile, and then after it's going to be mainly AI, right?
I mean,
So,
one of the kind of things I was, I guess, most excited about was seeing that fundamentally the book is trying to say, look, it's not necessarily that branches overall got worse. People stopped using them because digital got faster, it got easier, it got more responsive. So, but yet, still we sit on so many branches in the US anyway that are underperforming. I mean, I haven't seen current stats on this, but a couple of years back, there was data that suggested upwards of 30% of branches in the US were underperforming. They weren't at break even. And yet, many institutions sit on those, for a variety of reasons. So there is a thought process that needs to shift, at least here, and we can learn from what's going on around the world. But understanding that, again, it has to be based on our understanding of what the customer needs.
Yeah, yeah. For me, I found one of the interesting pieces of data was around the ATMs,
Mhm.
because I hadn't really thought about whether they're declining in number or not. I mean, I understood, especially in places like the US, cash back at retail stores had really eaten into ATM cash withdrawals. Because who in their right mind is going to go to an ATM at night or even as a separate stop when you already have to go to a drugstore or a grocery store or somewhere else, and you can get that 20, 40, $50 that you need if you need it for
which by
whatever
the way
reason.
is unique in the US, right? It doesn't exist
Okay.
here in Europe.
So, yeah, so I mean, but but it also makes sense if you're using contactless payments, like why bother with cash? I mean, that said, and this kind of goes to the branch also, if you go to, there's a large convenience store chain in the northeast part of northeast, I guess just the east coast of the US, called Wawa. Now, they have great mobile self-service kiosks that you can use. They're very fast, they're very easy. They also have regular cashiers, and they also have these ATMs put in by a bank, a local Pennsylvania bank. You will often see queues, lines of people at the ATM.
Right.
Okay, lines of people at the ATM. You will see lots of people lined up to work with the cashier, and then also people moving through the self-service kiosk, which you have to use your mobile wallet. You have to use your phone to signal that you're a
Yeah.
customer. So, it's like, oh, if you want a busy ATM that gets a lot of use, I mean, just putting it out in the middle of, even at a bank branch, doesn't necessarily make a lot of sense. Um, so I think that was really interesting, and that, I think it's really interesting to see the general drift away from these traditional delivery points,
Mhm.
and the increased usage around the world. But I think it's really important that they each, this chapters documented different kinds of change. And I think one of the things that's really important is that you can't copy and paste something in from one place into another. You know, like I what works in China, is that going to work in the US? Why were mobile payments first in Asia? Well, they didn't have the legacy infrastructure, not saying that's good or bad, that they have in the United States. I mean, now it's causing problems in the United States, but it's just a different evolution that I think uh, there could be less judgment in terms of good versus bad, right? This is good, that's bad. So I think that was really, I thought, helpful in terms of looking at that data, and I think it's important for bankers to look at that data and say, how are we justifying what we're doing? You
I
know, go ahead.
Yeah, I really agree, Stessa. One of the things that I appreciated about this kind of global perspective, it will help bankers understand kind of the catalyst, what created those environments in Australia, in the UK, what has framed up the understanding and the feelings around branches, as opposed to how branches came to be here in the US, and how people again have this kind of relationship to that physical location that might not be the case in China, that might not be the case in Australia, because understanding that the US isn't necessarily slower, it's just structured differently. So taking a look at all of this through the filter of, okay, is it truly going to be digital that maintains that relationship to the customer moving forward? And then the physical becomes that place for problem resolution, that place for, really dealing with high-end things. That opens a whole nother conversation about will the branches evolve here anyway into just serving the wealthiest among us? There's as many questions as answers in this book, I think.
I think also it's clear that um, when we talk about banking, and especially digital banking, most people are thinking largely payments. And the
Oh,
truth of the matter is, right, that payments, because of the success of fintechs, right, have grabbed a huge market share from banks, right? Think, the Stripes of the world, the Aiden of the world, the ones, the Venmos of the world, all those that have really grabbed market share of payments, because payments are a very important part. But if you look at Brazil, which is a great example, and we all will agree that Brazil and Pix is the number one digital public infrastructure in terms of success, fast success, too, right, at scale. Yet the data from the book shows that people visit branches and want branches mainly for insurance and bank assurance purposes, right? And then, so maybe the role of the branches is for certain services for everybody, be it wealthy or unwealthy, more complex financial products, right? And the same you can see in Europe, where we have more of the universal banking, structure in
Mhm.
financial services. And we're at a point here that bankers are looking to find ways to bring people to the branches to build relationships, because they've lost contact with the digital. And you can't provide advice, wealth, and all those things unless you build that relationship. You can sell products from the Robin Hoods of the world, or whatever they are. But the data there even shows that it's people that are already in the market, not the people that aren't. And you can't personalize and customize and advise. At least we haven't figured it out yet, right? So again, in my mind, we are at a point where again we need to redefine relationship building and branch reputation, and it has to be done within the context of the technologies that we have. I mean, myself and Paolo, we agree on whether AI can empower human employees at branches that are 360-degree advisors. They kind of can serve mortgages and insurance and wealth and everything. Maybe that's what will happen, which is completely something that is completely new to our world, right?
Yeah. And I mean, I feel like I've been talking about this kind of view of the customer for decades, and maybe I have, but I mean, that seems to me the promise of AI. I mean, because have personalization capabilities, and there are many great fintechs and banks out there that promise personalization, but do we really they really use their data to personalize services, or are they just saying, more of, you don't have a savings account with us, open one now?
Right. Are
Um,
they using that data as a launch of the next upsell sales pitch?
yeah.
Right.
Or are they using it in a way that says, hey, your data, which you agreed to let us use, tells us you might have this concern or this need, or we see this potential problem, happening. Um, and that gets into, we have a comment coming in from everyone listening saying, given programmable wallets and stable coins driven by AI, won't we soon be moving not just beyond the branch, but also beyond the mobile banking experience?
I was, those are the kinds of questions I think that all of us are trying to kind of embrace and consider and think about, but there are no answers to that question right now, because so much of this is happening in a way that's uneven, right? You've got such diversity throughout the entire ecosystem that some of these shifts and some of these changes, not only in terms of institutional capacity, but as well as local consumer behavior, it's not uniform. It's not all happening in this same exact kind of pattern. So
Yeah.
how some of these things end up developing are going to look very different. I mean, there may be parts of the world, and there already are parts of the world, where digital behaviors are, 5 times ahead of what somebody in either Pennsylvania or Michigan or California or Texas, the
Yeah, the
ecosystem
biometric, the authentication is a great example of what we're talking about, right? I mean, with their eyeball authentication, right? And in others, not even fingerprints. So you can't force consumers and to trade those privacy issues for convenience, basically.
Yeah.
We're not even
And what,
talking about any innovation, right?
yeah,
We haven't
yeah,
innovated in terms of financial products. So, as Cesar said, we're still selling saving accounts and ETFs or whatever investments and so on. There's nothing new there. It's the way it's delivered and the touch point that is different. We haven't
yeah,
done anything new in that respect.
yeah. I mean, the newsletter that I published, I guess was last week, around, my experience in Vermont. What happens when you're in a space where there is no internet connectivity or
Right.
cell connectivity? You know, yeah, it might be a minority of people as a whole in the United States, but there are pockets where it affects a larger percentage of the people in that location. So it's global. Yeah, programmable wallets and stable coins driven by AI, but it's also local because, going back to the book that we read by Aneta and her co-author, which
Erin,
name?
Erin,
Er-
Erin,
Erin. Erin, I'm sorry.
Erin.
Yeah,
Yeah.
so that need, even, big projects like Pix, understanding how people need to use these things and the context that they're using them in, is really, really important. And the what they want to do, which might be nothing that we've imagined, you know, sitting in an office somewhere, is very, very relevant. So I think, going into these innovations and new ways of imagining branch or ATMs, you really have to look at the way people use it. That's why I give that example of Wawa, where you have 3 or 4 different kinds of payments and delivery of bank services, all at the same time and all very busy. Um, it just points to, yeah, it may not be busy at the branch down the street, which was closed, by the way, but it's going to be busy in some other way. So that's an interesting point, and I think, it's, I think bankers, especially, looking for, and even fintech CEOs and founders, looking for, this is going to be the magic bullet that gets everybody to use programmable wallets, stablecoin, and agentic AI. I think you're it's the wrong way of looking at this strategically, in my opinion. I think it could be a little, it could obscure all the other opportunities that there are.
And I think not just because of, from the consumer perspective, but also I often think that we're also dealing with the kind of internal culture of so many financial institutions anyway, especially smaller ones, where, physical presence is part of their market identity. It's part of how they've defined themselves for generations. And so consequently, when you look at the age of some of the leadership in the community-based institutions, credit unions as well, that you can see where, a book like this is inviting them to kind of rethink or recalibrate their own role in the financial lives of consumers moving forward, and what piece that physical presence is going to play.
Yeah, yeah, and kind of building on that, Jen's chapter talking about branch strategies, and also the use, how some large banks like Chase and others are using branches more for specific product sales like credit card or mortgages, but also wealth management services, and SMB services. This kind of points to a trend also talked about in this book, but also outside for sure, about the increasing divide in banking services between the wealthy, the wealth management customers, and the not wealth management customers. I mean, which bank was it? Wells Fargo or somebody just moved their retail banking into the wealth management line of business. I mean, that seems like a clear interest, at least, in identifying those retail customers who need or have wealth management services. Um, so that points up, who's going to get who is who are who gets branch services and who doesn't, and does that kind of contradict some of the other, assertions in this book around, branch is irrelevant?
Well, I think when you look at data, again, this is the kind of data I look at here in the US all the time about who's actually using the physical space right now, who's walking through the door. And increasingly, it's small businesses and your wealth management customers. It's like, because our transactional activity has shifted so drastically to mobile and digital, that right now the branch appears only to be serving that particular segment of the population. Of course, small businesses has always been kind of the backbone of the
Or the
reason
economy.
for physical location anyway, because let's face it, if somebody's here in the US anyway, if somebody needs to take a lot of cash in at the end of a business day, whatever, where are they going to take it? What are they going to do with it? How are they going to process all of that? So the branch continues in so many small communities to be, where am I going to get caught? So where am I going to, how am I going to manage that part of my business? Until we walk away from cash entirely, at least for small businesses, it seems like there might be a place for some kind of physical interaction.
And let's not forget. Yeah, sorry, Jim, but the economies, smaller economies, obviously, that are more cashless, like Nordic countries, right? And Australia, they are clearly worried about the social impact, and they are designing policies to address that, which points to the fact that maybe that's where the plateau of branches is, um, because of the social issues of the elderly, basically, people, and the less digital. I mean, in my mind, the question is for how are bankers, because we're looking at it from the perspective of the user, right? We've talked about, which user would go to um, the branch, and we didn't touch on the fact that beyond the reduction in the number of branches, there's also some other important data around which branches are closed. Are they the rural ones? Are they, where there's in the big cities, and so on, right? That's also important, and especially given the JP Morgan strategy, which I think is the only one that is really expanding and has a clear strategy of expanding its branch network. And it is in certain centers where I guess they're targeting to serve these small businesses where they see that there are needs to serve, and I guess have it as a differentiating factor,
Efi,
because otherwise we've seen. Yeah, go. Yeah.
I was just going to say, actually, just yesterday, S&P Global had released the end of third quarter data on branch closures, net branch closures here in the US. And one of the things that I think was a little startling is that the actual net number of branch closures had reduced. It's lower than it has been for like the last 4 years. The difference between those that are opening and those that are closing has actually been shrinking. And I often think if it weren't for JP Morgan Chase, PNC, US Bank, Bank of America, I mean, all of them in the last year have announced efforts to either kind of redesign or repurpose, kind of refresh their branch network or add to their branch network. They're all being extraordinarily targeted in terms of where those investments are actually placed. And so to your point, yes, I think a lot of, everybody's looking at where are my underperforming branches right now.
But I wonder with these new branches and these refreshes and these different footprint sizes, are they inside the bank strategically? Are they looking at this separately from digital banking or mobile banking, or are they thinking it as a whole? I mean, because I think this line of business thinking, you know, rightly pointed out in this book, is not helpful.
Right.
um, because you know if I hearing customers spoken about as branch customers or mobile banking customers, that's never the way customers of any kind view themselves. And
Right.
how is that helpful for the bank, especially traditional banks, but even digital banks that think about some kind of physical presence? I mean, all of it uses technology, but bankers for a long time have looked at branch technology as well. That's not part of digital banking. There's always another excuse to keep it out of the channel integration. This is going back years now. There was always an excuse, it's too old. We don't need that at the branch. But I think that innovation in banks could be ignited if they strategically stop looking at it, and even profit wise stop looking at it as branch versus digital, because customers don't view that themselves way. And even in this book, there's documented proof of documentation data that shows people do some things in digital and then they go to the branch. And I think we see that everywhere where people might not necessarily, and you can't just generalize, oh, old people do this or young people do this. I mean, it depends on need. I mean, my son, who's in his early 20s, never goes to a bank branch unless I do the mean thing. Well, not even now, of giving him a paper check. But he lost his wallet, which included his credit card, and there was a branch of his bank that issued the credit card in the shopping mall, and he was able to go there, and they were able to in person reassure him that he'd be okay, he wouldn't be responsible. The thieves actually returned his wallet without the credit card to the salespeople at the store where it was dropped. Not good for them because they get caught on all the cameras. But he, in that place, in the middle of his shopping experience, which was probably a weekend, he was able to have that interaction that he needed at that moment, which was an emergency. But how do you look at that as branch versus digital? I mean, it's
To your point, Stessa, I think one of the things that I see a lot is that, again, every new technology, every new innovation that comes to our mobile apps or to our digital experience ends up chipping away at the actual purpose of that physical interaction. Yes, and in many cases, when we're in panic mode as consumers, whether we've had something compromised or whatever, being able to talk to a human actually can make that feel a whole lot better, especially if those humans have been trained to be empathetic and to understand. But at the same time, the more AI ends up kind of making our digital experience feel more empathetic and all the rest. I mean, again, unevenly, I think we are seeing, people move further and further away from the branch. And to your fundamental point, as long as bankers hold on to kind of an outdated understanding of the purpose of the branch, the role of the branch, if they still view it through this very transactional, siloed lens, they're going to miss the boat. They're going to sit on an increasing number of branch locations that are underperforming and are costing them way more, where they could be rediverting that capital over to actually improving their tech stack.
Efi,
Yeah.
did you want to chime in?
Yeah, I mean, again, the the question seems to be: Are bankers operating to optimize their unit economics first while serving customers, or are they thinking how to serve best customers in an economic viable way?
Yeah.
That's been there forever. And it seems clearly that for bankers, mobile banking has been a big gain because it does lower the cost of serving the customers,
Sure.
right? 100%. I mean, Brett claims that the customer acquisition cost is also lower. I'm not sure about that blanket statement, but for sure, digital lowers the cost of serving the customer, and that is a good thing for the banker, is it a good thing?
Well,
Okay.
I
So
I
we
think
have,
we missed
go
part
ahead.
of I think we missed part of what you were saying, Effie. It was a little
Oh, it was
digital
cut.
issue.
Yeah, I said that it's best. It's great for the bankers for their unit economics, but it is not clear that it's in the best interest of the customers. So, are we still, talking, or are bankers still thinking about bank branches because their priority is to lower their costs? Or are they thinking of how to serve better the customers and differentiate, offer something new, or a better experience? And can that be done through the branches? At the end of the day, that's really the question. And as Tessa said, in a way that is not segregated from looking at the wallet, and whatever product they've sold through the digital channels.
Yeah, yeah, yeah. So we have barely scratched the surface of this book.
Right.
So, um, but we want to just wrap up briefly around, instead of three takeaway items that we've been doing every discussion. Let's just focus in on one question around what, Brett and others in this book talk a lot about reframing the branch. Is that possible? Is it advisable? Um, what would your response be in the question or the idea of reframing the branch? What would your individual takeaways be around that question?
Wow.
My,
Yeah, I
my,
was
my
going to say we could
Go
spend
ahead,
all
Jeff.
afternoon talking about that. Go ahead, Effie. You start.
No, I would say, if I had to answer quickly, that uh, we would have to rethink the branch within the context of AI native banking, because that's our current reality. We don't have yet an AI native bank. We all, you know, have mental ideas about what it would be and how it would look. So the branch has to be rethought in that context. And again, not about the banker thinking how to use AI to lower their cost, how to delight the customer. And in this day and age, I think that has to go beyond the customer experience. We have to innovate new financial products, new ways to help people in their financial wellness. We have very powerful technology and we need to go beyond that. What does that include? It might include job and career and anything that touches financial wellness. in a holistic way. We haven't done that with digital banking. We have done brilliant thing, not holistic. So I think it's time that the branch is rethought in this context of holistic AI advisor, whether it is ChatGPT that is the interface, because the interface is also changing,
Yeah.
right?
Yeah.
We are assuming, we can think only with the current interface,
Mm-hmm.
the app, or know where it will end up. So we have to reimagine that and the branch together. We should not cross out the branch. It can be, a digital part of the whole experience. Because at the end of the day, we are humans, and maybe we will be at the point where we will value that even more.
Oh, you cut out again.
Well,
Did that-
let me go ahead and jump in by simply saying I think one of the big takeaways for me always is a lot of what we talk about with all of these books is about getting people to navigate change. And one of the things I know from my own study of psychology is there are three ways that people change. It's either through pain, through paying a price. You're no longer willing to pay the price of doing things the same way. And then the third way to navigate change is by giving permission, to actually invite you to look at something in a different way. And this book does that. It's inviting you to say, look, the branch is not likely to disappear, but the purpose has to change. So I know for a lot of bankers these days, I still think they're in the mindset of looking at their bricks and mortar, their branch. It's kind of like a $2 million security blanket, right? It's like, because that's what they know, that's the business model that they've kind of dealt with. This book is another wake-up call that says consumers are changing so rapidly. I mean, all the people that you're waiting to come into your branch for advice, they're looking at ChatGPT to get advice first. So, it's time. It's past time to really rethink and recalibrate.
Yeah. Yeah. For me, I think reframing the branch would best be done by not using the word branch.
Right?
Because it's all part of delivering stuff, products, services. It could be digital identity, as one of our commenters mentioned on LinkedIn. Whatever it is to customers, whether they're human, whether they're 10 years old, whether they're 50 years old, or whether they're 100 years old, or companies, whether it's a one-person enterprise, opening an ice cream shop down the street, or it's a large corporation. They are, the idea of all of those people flocking to one central point to do all their transactions is gone. Whether it's the death of town centers, or just the ability to push consumers, businesses to one point physically has changed, and the mix of behaviors has changed. I mean, who knows? Standing in that Wawa line at the ATM could be a corporate treasurer because he's got to give $20 to his daughter because the school only takes cash. I mean, we don't know these things, but I think in terms of looking at the silos, and God knows I've written about this, if you look at it as part of your strategy of reaching your customers, that changes the how we view it. We have to reframe the branch, not in terms of like the city center, but something else. Because there's still that data that shows when branches leave, the economics of a neighborhood change in the United States. And, to mitigate that, you have to reframe how you're looking at branches, I think, because the cost of putting one in every single rural area, sure, it's high. But I think they have to strategically use the data, but not to repeat the past, but to move forward in the future.
Stessa, what you just said kind of reframed something for me. And if I could add just this one thing, a lot of times I think it's helpful if we look at digital as being able to handle the predictable and humans handle the meaningful, right?
Yeah.
Banks, especially community-based institutions that I work with, they're going to thrive if they can blend those two things with some kind of clarity and intention. I mean, this book does a great job of saying, that's the real task in front of us is to make sure that we can kind of acknowledge that reality and blend it in a way that's going to meet the consumer where they are.
Yeah. And if you have the flexible architecture and rails, you can do that, by city, by community. And if not, I think that's a little challenging. Okay, so we wanted to wrap up and remind everyone our next FinTech Book Club will be March 13th, 2026. And we'll be reading Wealth Management with a Difference by April Rudin and Nick Rice. So get that and start reading. And watch for the launch of our new website early next month, fintechbookclub.com. And I'm sure we'll have an announcement on LinkedIn. So I want to thank everybody for joining today. If you have additional questions or comments, please put them, on LinkedIn, and we'll answer them, and we can continue the discussion there. Thanks again to everybody who attended, and we'll see you in March.
Excellent. Thank you all.
Thank you.